Rating the 15 most popular traded stocks on Robinhood from super amazing to stay away. What is happening, investors? It is your boy Jack, and today we're doing another tier list. I have the up-to-date most popular 15 stocks that people hold on the Robinhood app as of right now. If you're wondering where you see this information, it is from a website called RobinTrack, and it's pretty interesting stuff. I did a video similar to this for electric vehicle companies, and it went down really well, and you guys wanted more, so I figured give the people what they want. Now, since there is literally 15 companies, I am obviously not going to be going into depth about each one of them. I will just give a very brief description of my feelings on the company. I'm not going to waste any time, but right before we do get into it, can I please ask you to smash a like on this video? It really does help me out so much more than you understand. Of course, if you're new around here, subscribe. Literally not even a week ago we hit 10k. Right now we're just about to hit 11.5k. I appreciate you all so much. And lastly, drop me a comment down below once you've watched this video till the end. Let me know what you agree with or disagree with. And I ain't gonna drag this out, people. Let's just get straight into it. So here is the website RobinTrack, and if you click on leaderboard, here is literally the most popular companies on Robinhood. So first up we have Ford stock. Now the thing about this is these are kind of given out to people as sign up offers, you know, affiliate links. So this isn't really the most popular, but I'm going to include them anyway. And the same goes for the second one, which is General Electric. And then we get into the real companies, okay? American Airlines, Disney, Delta Airlines, Apple, Microsoft, Carnival Cruise Corp, GoPro. Again, I think a lot of these get given out for free. Then we have Aurora Cannabis, Tesla, Plug Power, which was an interesting one to me, Norwegian Cruise Line, Amazon, and last but not least, Bank of America. And so I've created this handy dandy little chart. I have all 15 of the company's logos down here. We're going to go through them in order of most popular to least popular, and we're going to rank them as either super amazing, amazing, mid-tier, meh, or stay away. So the very first company we have is Ford. And again, most of these are just given out to people for free. Now here's what Ford's max stock chart looks like right now. And I understand they've been around a long time, they've had lots of ups, but I mean, it has been very bad lately. During the Great Recession, these guys were down as low as $2 a share. They then went on a nice recovery. But again, literally 2011, since then it crashed, it came back up, and then since 2013, it has just been a downward journey. On the 6-month chart, they are still down close to 34%. They're not doing anything particularly special. They had a nice dividend, it has been cut, so right now they have no dividend. Now look, these guys do have some sort of potential going forward. They've, you know, rebounded in the past, but as of right now, I would see no reason to invest in them. I personally would have absolutely zero interest in investing in them. I'm not going to put them at the stay away because I can understand them, but they are going to go straight into meh. So not very good by any means. I personally wouldn't invest in them. Okay, second company, General Electric. And again, a lot of these shares were given to people as, you know, sign up offers, so a lot of people didn't actually buy into this company. And again, it's a company who has just been trending in the downwards way for so long. And on the 6-month chart, again, down 44.8%. If we go from the very highs, they're actually down closer to 50%. Recently, they've been taken to court by the UK tax authority in a $1 billion dispute. Not good for a company who's already struggling so badly. So a lot of things have gone wrong for GE in recent history. Their problem isn't what's gone, it's what's left. The market for most of their power businesses has collapsed. They were the sole engine provider for the 737 MAX, which was one of the best selling passenger planes in the world, but 2 fatal crashes linked to design flaws, the entire worldwide fleet was grounded. For me right now, I couldn't think of a single reason I would want to invest in this company. If you were to invest in them now, you could maybe call it a spec play, but it just seems like a ridiculously poor spec play. There are way better speculative options out there. For me, honestly, they have to go here. They have to go into the stay away. Oh no. I'm sure, as always, I'll have some people who disagree, but nah. Okay. American Airlines. This actually is down to investors buying this stock. I think everybody knows what's gone on here, okay? They crashed heavy. I mean, they were down 70% at one stage. As of right now, from the 6-month highs, still down over 60%. We started to see this amazing rebound, up over 100% in a matter of weeks. A lot of those gains have been taken away again. Over the last month, the stock price has just been going down and down. And this is actually after some positive news in relation to airlines has been coming out. There is more people flying to an extent. There is less strict, social distance rules on certain airlines. And if you've been following me for a few months, you know that I was a massive bull on the airline industry as a whole. I mean, Delta was my baby and will forever have a special place in my heart. And I, who was deemed one of the biggest bulls on airlines on YouTube, sold out of my my position on Delta at a profit, thankfully, because it's just too uncertain what's going to happen in the short term. And I mean, the thing is, the few years before this even happened, American Airlines was downtrending. A best case mid-term scenario, and I'm speaking anywhere from 1 to 5 years, is around this price point, is around $29 a share, and that's when everything is back to the way it was. That's not going to happen for a while. These companies have had to take on loads more debt, etc, etc. I just think there is an awful lot of risk in these companies at the moment, especially American Airlines. They are my least favourite of the airlines. I still hold a position in Southwest because I do believe they're the safest, least volatile of the airline stocks. I won't get too into it. I'm not going to be that mean to put them in stay away, but they don't quite make mid-tier. They're going to join forward on the mid-tier because I do see a stage of life where I would like to invest in American Airlines or maybe Delta or whoever it is. But right now, there's just so many better places I believe you could put your money. Okay, now we're having a look at Disney. I actually spoke about these. I mentioned them in today's video that I uploaded earlier. I have a lot of praise and good things to say about Disney. I am a holder and I am going to be a long-term holder. I could see myself holding this company for decades. The last month, up 6%. Now, last week was fantastic. Last week, we went up nearly 5%. A lot of that came on the last day of the week. On Friday, we went up over 2%. Now, in the short term, I have my worries, okay? Parks are starting to open back up in places like Florida where literally the virus cases are at all-time highs. It does fill me with some sort of worry in the short term. But Disney, as a long-term investment, is literally one of my favorite companies, and I do expect them to have a large position in my portfolio. My favorite companies are the big tech companies, my Facebooks, my Amazons, my Apples, etc. But Disney, I absolutely love them as well. Disney, I can't rate them super amazing, even though I do love them. Because, I mean, if we look at the 5-year chart, it's choppy. I mean, even at the peaks, it was only up 27%. They only have a small dividend. It hasn't been an amazing recent history. Now, in the max stock chart, we have seen some incredible periods of growth for this company. I love them. I think it would be a bit too generous to put them up here, but I am going to put them into the amazing tier. Okay, Delta Airlines. A lot of what I just said for American Airlines stands for these. It's hard to say because these were my baby. Like, these were the first company I really got involved with, and I love to pieces. For the first probably 2.5-3 months of me trading, this was the biggest position in my portfolio. I literally bought these guys for the first time here at $35. I bought them the whole way down. I remember buying them at $19. I bought them at the bottom, I bought them on the way down, I bought them everywhere. And I remember I sold about half of my position at, I think it was 20 or 25% profit, and only very recently I sold the rest of my position at about, I think it was 7 or 8% profit, so not a lot. I think they're better than American Airlines. I so much better than American Airlines in pretty much every single way. I'm not going to get into it because I've spoken about it many times in the past. As of right now, though, a lot of the same concerns stand. I'm going to put them into mid-tier, to be completely honest with you. They could make meh, but I just think they're a lot better than American Airlines. Apple, one of my babies. The second biggest position in my portfolio right now, I think. The biggest position in Berkshire Hathaway's portfolio, I think it takes up over 40% of the portfolio. An amazing company that has had some absolutely incredible growth in any form of history. Last week up 3.7%, you know, a small bit. The last month we're up 14%. On the 6-month stock chart we're up over 20%. The 1-year stock chart up over 90%. On the yearly chart, most places are still down. It's a company I love. I'm willing to invest heavily in. I love their products personally, okay? I really do. I have a Mac right here. I have my phone beside me. It's an iPhone. I love them. To me, these are a super amazing company. You can probably guess that's where they're going, considering they're the second biggest position in my portfolio. And, you know, I am biased because tech is my favorite industry by far, but I love Apple and everything about them. And that swiftly brings us on to Microsoft, another company who's in my 5 biggest holdings. Just so you all know, my 5 biggest holdings are Facebook, Apple, Amazon, Google, and Microsoft. Not necessarily in that order. Facebook's the biggest, then Apple, then the other 3 kind of I have even amounts in. I just think there is so much to love about Microsoft. I mean, they're in so many little, you know, smaller industries as one company. And I mean, founded by Bill Gates. Again, on the 6-month stock chart, up 30%. The 1-year chart, 54%. And the 5-year chart, 350%. I just love absolutely everything about them. Market cap of $1.6 trillion. Absolutely massive. And their growth, what I love about their growth is it's just been so steady. I mean, look at that 5-year chart. It barely ever moves down at all. So for me again, Microsoft, yep, I love you. You get to go up to super amazing alongside Apple. Carnival Cruise Corp. What is there to say about Carnival Cruise that hasn't been said? Again, if you're a long-time subscriber, I used to speak about these guys an awful lot when they were around the $8-9 price point. They were all of the rage on YouTube. Up 10% yesterday. But for the week, they're still pretty much at break even. For the month, they're down 7.34%. And on the 6-month chart, still down very close to 70%. I mean, I followed Carnival from here all the way down to $8, then all the way down to $8 again, then all the way up to about $24, now all the way to here. The truth is, guys, we don't know when these cruises are going to be going again realistically. A lot of money has been lost, and these cruise companies can't afford to lose that much money. They've had to take on some ridiculous debts at ridiculous rates as high as 11.5%. Their balance sheet's in a horrific state, everything is in a horrific state, and it's an industry that's not going to be back to these levels for a long time. I mean, let's not kid ourselves, guys. When they were down around $8, honestly, yeah, I could have seen them as worth a gamble. I nearly did. I nearly loaded up on this company at $8. And to be honest, if I knew what I know now, I probably would have pulled the trigger. But I was very, very new to investing at this point. And, you know, my mind was only ever in the medium to long term. The thing about Carnival, guys, is they do have a business. And they're the biggest player in their market by a considerable margin. In the short term, anything can happen with Carnival. In the medium to long term, okay, if they get through this, if being the key thing, I know a lot of people might think Carnival's too big to fail, they're most certainly not. If they get through this, I could see some nice growth. You know, I could definitely see them in 5 years or so getting back up to that $50 mark, maybe even $40. At this price point, I mean, again, if you were one of the people who got in at $8 or $9, I'd probably hold, you know, I would hold. But at this price point of $16, for that kind of upside in that time period on such a risky company, no. So if you're not invested yet, okay, I put them at meh. If you're already invested, honestly, I'd leave them in mid-tier because I would be happy to hold them if I was in somewhere between $8 to $10. But since I'm not, they are going to go on to meh for me. I don't think they're horrible. I do understand why you would want to invest in them. They're just not for me at all. So next up, we have another somewhat weird one. We're having a look at GoPro. And again, I believe that these are given out for free. You know, these are the affiliate kind of sign-up offers that you get. You get a GoPro share sometimes instead of your General Electric or Ford. GoPro, I mean, look at the chart. You can tell the volume is very low by the moves that it makes. It doesn't take a lot to move this stock. You don't like seeing this. The volume right now is very low compared to its average volume. Now, to be fair to them, on the 6-month chart, they have made highs of 18%. And on the 1-year chart, they're not too far behind where they were. They're down about 10%. Things get ugly when we look at the 5-year chart. Or let's just go to the max chart. There was a stage where these guys were $80 and then they just died. And as of right now, they have less than 90% of the value they had at one stage of life. Their market cap's at 772 million. I've no interest whatsoever. Now, I can understand them as being, you know, somewhat speculative. You could take a gamble on them. They could somehow be the next thing. I don't really see a place in the world for GoPro to be a massive, massive company. There's just so much competition and so many more established names out there. It's for that reason I'm going to put them into meh, because I can understand why you would want to buy them, but for me, zero interest whatsoever. I wish there was somewhere between meh and stay away. I don't think they deserve to be here, but look, I'll put them in meh. I'll be somewhat generous. Okay, next up we have Aurora Cannabis. Oh, a cannabis company. So right off the bat, I'm not invested in any cannabis companies as of late. I've done bits and pieces of research here, but I'm definitely not the most knowledgeable in the industry. I'll just be honest. But these guys here, it's Aurora and Canopy, are the two who have gained my interest the most. Now, it's been a bad month, down 7%. We go to the 6-month chart, and again, from exactly 6 months ago, they're down over 40%. From the recent highs, they're down over 50%. We go over to the 5-year chart, and it's just ugly. I mean, nothing makes any sense. Now, I do like what these guys are doing, okay? I really do, and I can understand why you'd want to invest in them. I mean, if everything goes these guys' ways, that stock price is going to be worth a lot more than $12 a share. But for me personally, right now, it is really, really speculative in nature. And I could see a world where this company is either $100 a share or $1 a share. For that reason, I'm not confident to invest at this particular price point. If I start to see some relatively concrete evidence that this company is going to go up, you know, if they get the market share that they need, yeah, I'll invest. But I'd rather invest at $25 a share as an extremely confident investor than $12 as a really speculative investment. That's just me, that's just the way I feel about the company. One thing that I like that they did recently, just a small thing, okay, is they appointed Miguel Martin, President of Aurora USA and Head of Reliva, to Chief Commercial Officer of Aurora, effective immediately. So, you know, they're trying to improve the management. They're trying to push forwards. I see the potential. You know, I'd feel more comfortable investing in this company than some of these ones. I might be a little bit generous, but I'm going to put them into mid-tier because I do see a world where I could invest in this company. Okay, next up, Tesla. You all know exactly who these guys are. I mean, not even a week ago I made a video because they hit $1,300. Not long before that, they were at $1,000. Now they've gone up to over $1,500. I'm not invested in them just yet, okay? But they have to go in super amazing. I mean, I couldn't put them anywhere else. What I will say that always ruffles a few feathers is that I think in the short term there will be a considerable pullback. I think it would be somewhat realistic to see Tesla below $1,000 someday. Worst case, I could see them falling to $600 to $700. I mean, it's not uncommon for us to see 50% moves in Tesla. In the last 6 months, there's one that took 3 weeks. There's one that took just less than a month. And then obviously we've gone on this incredible run up over 250%. But the point stands, this is a volatile company and so often they crash and they go up. If I miss out, it's completely fine. I'm very happy for everybody who's in Tesla at this price point and anything below it. And I do believe it's a good investment in the long term. I mean, of course, in my opinion, when we look back in 5 or 10 years, they're going to be way above $1,500 a share. But right now, I'm not comfortable investing. That is just me personally. I still do really understand how good of a company they are. That's where they get the super amazing spot. Norwegian Cruise Lines, okay? This is a weird one to me. Obviously, a lot of what I just said about Carnival stands with these guys, but I also think they're in an even worse position. 6-month stock chart down 72%. I mean, on the 5-year chart, these guys didn't really do anything. I mean, if a company can't grow in decent conditions, how do we expect a nice recovery? And then again, the max stock chart, it doesn't even get any better. It's just been really, really sideways. I already spent a decent bit of time speaking about Carnival. A lot of that goes for Norwegian as well. But since I do believe Norwegian is a worse investment, I'm actually going to put them under the stay away bracket. You could make an argument they should go into meh, but that's where I'm putting them. Now, this one was interesting to me. Plug Power. I didn't expect this to be in the top 15. On the 6-month chart, from the bottom up 228%. From the start up 126%. Now, I like them. I do like them, okay? Plug Power, they're an American company engaged in the design and manufacturing of hydrogen fuel cell systems that replace conventional batteries in equipment and vehicles powered by electricity. EV. We all know how much of a demand there is for this right now. But on the 1-month chart, guys, up over 100%. At this price point, no, no. Again, a company in the last 5 years. Look, not a lot's really happened at all until very recently. I think a lot of what is to happen is priced in right now. And I also think a lot of people are going to run away with their profits very soon. So again, it's kind of in a short term, no interest, but you never know, there's some stage of life I might buy them. I'll put them into mid-tier. I see potential, but they're not for me right now. Second last company, Amazon. I'm not even going to get into it, but they're going into super amazing. I love Amazon so much. 6-month chart, okay? Their big dip was 22%. Since then, they've rallied up nearly 100%. The last 1 month, up 25%. I am speaking really fast in today's video. I don't know what's going on. 5 days ago, they were $2,934 a share. We're now up to $3,200. 9% increase on the week, and nothing special even happened. 5-year chart, 562%. Amazon has always been an incredible company, and this whole new stay-at-home system, you know, a lot of people working from home, things along those like ordering more things online. Amazon's only going to do better. I know that there is more and more competition on a monthly basis. Walmart, for example, doing their Walmart Plus. I don't think it's going to have the biggest effect on Amazon by any means whatsoever. I love them. I have a full video on them if you want to check it out. But yeah, it's Amazon. I mean, where am I? They are up there. They are in the super amazing 100%. And now the last one. Again, one that I found quite weird. The Bank of America. Now, we all know how bank stocks are doing right now. Okay, right now, Bank of America is doing better than average, only down 30%. 5-year chart, I mean, in fairness, they were on a good run. They're still up a little bit in the 5-year chart. All things considered, it's been fine. Dividend yield of 3%, PE ratio of 9.8. Yeah, it's fair. I can't say that they excite me in any way whatsoever. If I wanted to go for a safer bank stock, it would definitely be JP Morgan, who I am invested in. And if I wanted the maximum return on a bank stock with the highest risk as well, it would be Wells Fargo. I know a lot of people won't agree with that, but I did just say the highest risk and the highest reward. Remember that. Remember I said the risk part. Bank of America, yeah, it doesn't excite me. I understand it. They can go into mid-tier. They can join the boys. You know what? They probably deserve to be at the front of the mid-tier. They're probably better investments than these ones. Oh, wait. What if I had to put everything in exact order? So super amazing. This is how I would put it. Apple, Amazon, Microsoft, Tesla. I know a lot of people would have Tesla here. I completely respect it. But this is just me as a person. Obviously, Disney is the only one amazing, so they will stay there. Mid-tier. Oh, this is a tough one. I'd probably have to go honest. Oh, this is really tough. Yeah, I'll leave it in that order. That's okay. You know what? Carnival can go in front just because they're a bit of fun. American Airlines can go next. Again, there is big upside potential. Wait, you two swap. Wait, you two swap. And then for the GoPro, I don't really care for either of them. I'll just leave them in that order. And stay away between General Electric or Norwegian Cruise Line. If I had to buy one of them, it would be Norwegian. So that is the exact order that I would put the 15 most popular stocks on Robinhood in. Again, I don't expect everybody to agree with me by any means whatsoever. We're all different investors. We all have different goals, and that's completely fine. This is just my thoughts. I actually really enjoy making these videos. I don't know what it is. It's fun. You guys absolutely smashed the support on the one I did on electric vehicles. So if you've watched till the end, can I please just ask two things of you? If you haven't yet, hit that like button, and also drop me a comment down below. Let me know what you thought. Let me know what you'd like to see in a tier list next, and let me know what you would change. Doing those things will really help the channel out, and I will be so appreciative. Anyway guys, I do hope that you enjoyed. I hope that you have an absolutely fantastic day and the rest of your weekend. I will see you for tomorrow's videos. Peace.